Ever wonder how those massive organizations you interact with every day, maybe your employer or a company you follow, actually manage their money?
Yeah, it can seem pretty opaque, can it? Like a black box sometimes.
Totally. Well, today on the deep dive, we're pulling back the curtain a bit.
Getting into the nuts and bolts.
Exactly. We're taking a focused look at the role of accounting in these large organizations. Think of it like getting a financial MRI, a clear picture of what's really going on inside.
That's a good analogy.
We've gathered information outlining the essential principles and, why accounting is just so crucial here.
Mhm.
Our goal, to cut through the complexity, define what you really need to know, and explain why accounting matters if you want to understand how these big players actually work.
Sounds good. Where should we start?
So let's dive in. What is the core function of accounting in these large entities?
Well, simply put, accounting is the system. It's how companies track and report all their financial activities. It's really the foundation for understanding their financial health and, importantly, for making informed decisions. Every single transaction gets recorded and categorized.
Right, so it's about keeping score, financially speaking. When we look at that scorecard, what are the absolute must-know elements? I always hear about assets.
Assets, yeah. Think of assets as basically everything the company owns that has economic value.
Like what kinds of things?
Well, cash, obviously, but also inventory, the products they plan to sell, and bigger things like buildings, machinery, equipment. It's what they use to generate revenue.
Got it. The resources they have to work with, and then there are liabilities. That sounds like the opposite.
Precisely. Liabilities are the company's obligations to others.
What they owe.
Exactly, what they owe. This could be bank loans, money owed to suppliers, accounts payable, they call it, or, future payments they're already committed to.
So assets are what they have, liabilities are what they owe. What about equity? That one pops up a lot too.
Equity represents the owner's stake in the company.
The owner's piece.
Yeah. It's essentially what's left over for the owners after you subtract all the liabilities from the assets. Think of it as the company's net worth, the part belonging to the shareholders.
Okay, asset minus liabilities equals equity. That gives a snapshot. But how do we see if the business is actually, doing well,
Yeah.
making money?
That's where revenue and expenses come in.
Right.
Revenue is the income a company earns from its main operations, usually selling its products or services.
The money coming in the door from sales.
Pretty much.
Yeah.
And expenses are all the costs incurred to earn that revenue. Things like salaries, rent, marketing, the cost of the goods they sold.
Makes sense. And the difference between those two tells us what?
That gives us the net income, or, profit.
Profit, the bottom line.
Exactly. It's what's left after all those expenses are subtracted from the revenue. It's a really key indicator of how profitable the company is.
Got it. Profit's crucial, obviously. But I also hear people talk about cash flow almost more intensely sometimes. How's that different from profit?
That's a great point. They're related, but distinct. Cash flow is the actual movement of cash, real money, coming into and going out of the company's bank accounts.
Not just numbers on a spreadsheet.
Right. See, a company might show a profit on paper that's the net income, but it still needs enough actual cash on hand to pay its immediate bills, like salaries or suppliers.
Ah, I see. So you could be profitable but still run out of cash.
It can happen. That's why strong cash flow is so vital for a company's short-term survival and just keeping the operations running smoothly. Liquidity, they call it.
Okay, these core concepts, assets, liabilities, equity, revenue, expenses, profit, cash flow, they paint the picture. How do organizations actually use all this information to make big decisions?
Well, this is where the main financial statements come into play. You've probably heard of them. The balance sheet, the income statement, and the cash flow statement.
Yeah, vaguely.
They basically summarize all this data we've talked about into a comprehensive overview.
Who uses them?
Oh, lots of people. Management uses them constantly to make strategic decisions. Investors look at them very closely to assess the company's value and potential. And regulators use them to ensure everything's above board.
So it informs pretty much everyone involved. I imagine planning for the future is a big part of this too, like budgeting.
Absolutely. Budgeting is all about forecasting future financial performance and figuring out resource needs. And it relies heavily on historical accounting data.
Looking back to look forward.
Exactly. By analyzing past trends in revenue, expenses, cash flow, companies can make much more informed projections and decide how to best allocate their money and resources.
Makes sense. You need to know where you've been to plan where you're going. And how do they know if they're actually hitting those plans, if they're on the right track?
That's performance measurement. They use KPIs, key performance indicators, which are often derived directly from accounting data.
KPIs, right, like metrics.
Yes, specific metrics, things like profit margins, return on investment, inventory turnover. These allow organizations to track their progress against goals and, really importantly, spot areas that need improvement or adjustment. It's like a dashboard for the business.
Like checking your speed and fuel gauge while driving? Okay. Now, I know there are also a ton of rules and regulations for big companies. How does accounting fit into compliance?
Regulatory compliance is critical. Accounting ensures that financial reporting follows all the required legal and accounting standards, like GAAP or IFRS,
Rules of the road, financially speaking.
pretty much. And specific laws, like the Sarbanes-Oxley Act in the U.S., for instance, mandate certain reporting practices. It's all about ensuring transparency and protecting investors.
So building trust and accountability. What about potential problems? Can accounting help spot risks before they become disasters?
Yes, definitely. Through careful financial analysis, looking at ratios, trends, comparing performance to benchmarks, companies can identify potential financial risks early on.
Like an early warning system.
Exactly. It helps them proactively address issues, maybe related to debt levels or cash flow shortages or inefficient operations, before they escalate into major problems. Risk management is a huge part of it.
It really seems like a central nervous system for the organization's finances. Now we're living in a very digital age. How has technology changed the world of accounting? It used to seem like endless paper
Oh,
ledgers.
it's been revolutionized
Yeah,
massively. Cloud-based accounting software automates so many of the routine, time-consuming tasks now.
less data entry.
Way less. And AI, artificial intelligence, is starting to play a role too, helping to analyze vast amounts of data, identify anomalies, maybe even detect fraud.
Wow.
So overall, data is just much more accessible, easier to analyze. It frees up accounting professionals to focus less on the manual grind and more on strategic analysis and providing insights.
So it's shifted towards being more efficient and maybe more analytical, more strategic.
Definitely more strategic. Accountants are becoming key advisors, not just number crunchers.
Okay, this has been super insightful. Let's try to wrap this up. What's the sort of the main message here, the key takeaway about accounting in these big organizations?
I think the fundamental takeaway is that accounting isn't just about bookkeeping or, ticking boxes. It's truly the essential language for understanding the financial well-being, the health, and the strategic direction of any large organization.
It's the language of business.
It really is. It provides the bedrock for accurate reporting, for smart decision-making, risk management, compliance, ultimately for their ability to operate effectively and hopefully thrive.
That paints a really clear picture. So for everyone listening, now that you've gotten this glimpse into the financial framework, what new questions might you have about the companies or institutions that shape your daily life?
That's a good thought.
It's maybe worth pondering how these core ideas, assets, profit, cash flow, might just offer a new lens, a new perspective on the world around you.